Hi, I'm Jenny Griffiths and I work in the Provider, Risk and Assurance team within the EFA and SFA Joint Shared Service. My team works in partnership with Academy Trusts to develop the financial accountability framework for the sector. Over the past year, we've seen more transfers of academies between trusts, whether that is an academy moving between a SAT and a MAT, or a MAT to a MAT. So we wanted to provide you with some information on accounting for these, together with the practicalities surrounding submissions of returns to EFA, which are the financial statements, sometimes called accounts, the budget forecast return, and the accounts return, both March and August. I'll also explain what you need to submit to Companies House. Academy trusts are dormant or inactive when there is nothing going on. Mainly, they close or transfer out their last academy. As an academy trust is separate from its operations, which is the academy school, the academy trust continues in existence after losing its academy schools. Dormant companies are still required to prepare accounts and file them with Companies House. In addition, the department is required to include the pre-dormant activities of all academy trusts as part of its financial reporting. Consequently, even after an academy trust has become dormant, it may still have an obligation to send its accounts to the EFA and file an August account return. As mentioned previously, the school operation is separate from the legal entity, and the school usually performs under a trading name, which is the long-standing name of the school which the public is used to. The operations of the school, as all the assets, liabilities and income and expenditure streams that are used in the course of the business. It is these elements that are either closed down or transferred to another academy trust. So what does that mean in respect of accounts and the accounts return? An academy trust is required to prepare and file with both Companies House and EFA its annual August accounts for the period immediately after it becomes dormant. The accounts need to include the regularity report for both the accounting officer and reporting accountant, as we need comfort over the use of funds. Regarding the August account return, this must be completed and submitted if there was at least one operational academy during the year. Where a trust is ceasing, you must remember to include the relevant regularity reports, as we need confirmation over the use of funds. This will cover the period that the Academy Trust was in operation and is needed as part of our assurance process review, where we review the financial statements. To help you understand this further, we've used an example with a date of closure for the Academy School of 31st of March 2016. As part of our assurance and consolidation processes, we need all the information and financial results whilst the Academy operation was active. This means that we need the accounts return for this period. Whilst you prepare accounts up to 31st of August, we have had cases where the Academy Trust has changed their accounting reference date, creating a shorter period of account, which ties into the cessation of the operation or transfer out. In these circumstances, please discuss with us so we are aware, and you will use whichever is the most recent accounts direction instead of waiting for the one the following year. But what about the other returns? We also need the accounts return information for the period. You can submit the results anytime from post-closure, and we usually accept this via email, again, instead of waiting until after August. We also still need a budget forecast return for the period, and in this case, it will include the actual outputs for the period 1st of September to 31st of March, and these must be submitted by the 31st of July deadline. We have seen single academy trusts deciding to cease operations and transferring their sole academy into a multi-academy trust. There is also a burgeoning mat-to-mat academy transfer market. The important thing to note here is that academy trusts are required to submit financial information to EFA and Companies House in any year they have had an operational funding agreement, which is an open academy. One of the main points here is the academy trusts involved in the transfer should formally agree the actual value of the assets and liabilities to ensure mirrored balances within each other's financial records. This may be confirmed after undertaking due diligence, which isn't a formal requirement, but it is good practice. The table shown explains the information included within the Academy's accounts direction, which is in section 8, including how the balances are measured and where they are shown within the balance sheet and statement of financial activities. The main thing is to ensure all balances are removed from the balance sheet. This means you will need to be able to separately identify the share of debtors, creditors and fixed assets, together with the cash in bank. This may take a little time to work out, but it will be imperative to a smooth transfer. There will be no physical payment between the two trusts, as it is different to a normal commercial transaction, so in substance it is a gift. This means that there is also no goodwill generated as a result of the transfer. The transfer of assets and liabilities will be shown within the SOFA as income or expenditure dependent on the bottom line results. Then, from the date of the transfer, the trust gaining the Academy operations will report the financial results. Again, using an example date of 31st of March 2016 for the transfer between one multi-academy trust to the other, what do each of them need to recognise? We require financial information relating to the transferred academy for the full 12 months of a financial year, pre-transfer from the selling academy and post-transfer from the acquiring trust. The cut-off date in this instance is 31st of March, so operating results for the first 6 months of the year will be in MAT 1 and the remainder of the year in MAT 2. There will also be corresponding gains or losses due to the transfer of assets and liabilities. In terms of the August accounts return, the results will follow those that are included in the financial statements. The assets and liabilities won't be shown within MAT 1's balance sheet, instead MAT 2. It's important to note that transferring academies does not trigger a requirement for a March account return, as this is only for newly converted academies, and the academies in this instance have already begun trading. The transfers also shouldn't be shown as a transfer on conversion, as they are within the academy sector. An academy trust must complete a BFR for the period it's had an operational academy, and it must submit a BFR covering the period the academy was part of the trust, up until the transfer out date. In this instance, the actuals will be up to March 2016 and will be included in MAT 1, and then the forecast results from April 2016 onwards are included within MAT 2's BFR. We hope you have found this presentation useful. If you have any queries with the information that you are required to submit, please discuss with your professional advisors in the first instance. Thank you.